Picture this. You've been researching crypto for weeks, and you're finally ready to invest. Suddenly, the market takes a nosedive. Bitcoin's down 10%, and altcoins, they're crashing even harder. Panic sets in. What do? Hey, welcome back to the channel where we simplify investing, build smarter strategies, and help you create a wealthier future. Today, we're tackling a critical question. Should you buy the dip? More importantly, is a Bitcoin dip or an altcoin dip the better move for beginners? We're breaking this down in a way that's easy to understand, relatable, and actionable, even if you're starting with just a few bucks. Plus, I've got some strategies at the end that most beginners miss, so stay tuned for that. Spoiler alert, the difference between Bitcoin and altcoins during a dip can make or break your portfolio. And if you're new, knowing this could save you from making some costly mistakes. So let's dive in. Segment 1. Alright, let's start simple. What exactly is a dip? In the world of crypto, a dip happens when prices drop significantly over a short period. For example, if Bitcoin is trading at $30,000 and suddenly drops to $27,000, that's a dip. Now, dips aren't necessarily bad. In fact, seasoned investors love them because they're opportunities to buy assets at a discount. But here's the kicker. Not all dips are created equal, especially when comparing Bitcoin and altcoins. Bitcoin is the OG of crypto. It's like the foundation of the entire market. Think of it as the blue chip stock of cryptocurrencies. When it dips, it often pulls the rest of the market down with it. Altcoins, on the other hand, are more volatile. They're like the tech startups of crypto. High risk, high reward. Imagine Bitcoin as a reliable Toyota and altcoins as Lamborghinis. Sure, the Lambo is exciting, but one wrong turn and, well, you're calling a tow truck. The key takeaway here is that Bitcoin tends to be more stable, while altcoins can skyrocket or plummet dramatically. Understanding this difference is crucial, especially if you're new to investing. But there's more to this story, and it's not just about stability. Let's talk about the psychology of dips and why beginners often get trapped. Segment 2. The psychology of dips. Let's be real, dips mess with your head. You see red on your portfolio, and suddenly fear takes over. You start thinking, what if I lose everything? This is called FUD. Fear, uncertainty, and doubt. And it's the kryptonite of every beginner investor. But here's the thing. Dips are only scary if you don't have a plan. Let's take a relatable example. Imagine you're at your favorite store, and your dream pair of sneakers goes on sale for 30% off. Do you panic and think, oh no, the store is failing? Of course not. You see it as a deal and buy. Investing works the same way. Dips are discounts on assets you believe in long term. Unless you're buying Dogecoin because your cousin's best friend swears it's going to the moon, then well, good luck. So instead of fearing dips, see them as opportunities. The trick is knowing which dips to buy and when. That's where strategy comes in, which we'll cover in just a minute. But first, let's look deeper into the difference between Bitcoin and altcoin dips. Segment 3. Bitcoin versus altcoins. Alright, let's compare. When Bitcoin dips, it's usually because of macroeconomic factors, things like interest rate hikes, regulatory news, or major market sentiment. These dips tend to affect the entire crypto market, but Bitcoin's recovery is often quicker because it's the most trusted asset. Altcoins, on the other hand, are like roller coasters. A Bitcoin dip might pull them down 10%, 20%, or even more. Why? Because altcoins are speculative. They don't have the same market dominance or institutional support as Bitcoin. But here's the twist. When the market recovers, altcoins can also rebound much faster and higher than Bitcoin. It's the risk-reward trade-off. So what should you do? Here's a simple rule of thumb. If you're risk-averse, focus on Bitcoin. It's less volatile and more likely to retain value over time. If you're willing to take on risk, diversify with altcoins. But stick to quality projects, those with real-world utility, strong development teams, and active communities. But what about timing? How do you know when to buy during a dip? That's the secret sauce, and it's coming up next. Segment 4. Timing the dip. Let's talk timing. The biggest mistake beginners make is trying to predict the exact bottom. Trust me, even pros can't do this consistently. Instead, think of buying dips like planting seeds. You don't need to time it perfectly, you just need to start. Here's a step-by-step guide. 1. Check Bitcoin's support levels. If it's dipping but holding at a strong support level, that's a good sign. 2. Watch the news. Are there external factors causing panic, like regulations or major hacks? If yes, decide if the fear is short-term or a real issue. 3. Scale in. Don't invest all your money at once. Buy in small amounts as the price drops further. This strategy, called dollar cost averaging, reduces your risk. For example, let's say you've got $100 to invest. You might buy $25 when Bitcoin dips 5%, another $25 if it dips 10%, and so on. Think of it like going to a buffet. You don't pile your plate all at once. You start with a little, see what you like, and go back for more. The key is patience. Crypto is a long game, and dips are just part of the ride. But what if you're feeling overwhelmed or unsure? Let's address that next. Segment 5. Overcoming fear and taking action. Look, I get it. Investing in crypto can feel intimidating. The market moves fast, and the fear of making a mistake is real. But here's the thing. Every expert you look up to started as a beginner. They made mistakes, learned from them, and kept going. Start small and focus on progress, not perfection. Even if you only invest $10, you're building the habit of making your money work for you. And that's huge. Remember, dips aren't disasters. They're opportunities. The only real mistake is doing nothing and letting fear hold you back. Call to action. So here's the big question. Are you ready to make your move? Whether it's Bitcoin and altcoin or a mix of both, take what you've learned today and start building your strategy. And I want to hear from you. Drop a comment below and share. Are you team Bitcoin or is there an altcoin you're watching? Let's talk about it. If you found value in this video, don't forget to like, subscribe, and hit that bell icon. You've got this, one step at a time. See you in the next video.